Government comes out and says CPI is 8.2% higher than expected. Mortgage applications for purchases are down 39%. The likelihood that the Fed is going to raise the interest rates another 75 basis points has increased to a 99.6% chance. So with that being said, let's go ahead and deep dive into it and see what that means for you. Leave us a comment. If we said something wrong, messed up, let us know so that we can fix it. Like I said, iron sharpens iron, and we like to be better about the content we bring you. So with CPI being at 8.2%, a lot higher than everybody was expecting, we saw a huge shock in the stock market, as well as if you go to the Fed Watch tool here that we brought up here, it increased the likelihood that bond basis points from the Fed is going to be raised between 375 to 4%, which is going to correlate with our interest rates. Right now, our interest rates are sitting at about 7.2, which means we could be seeing interest rates creeping into the 8%. With that being said, we are already so high. Our mortgage applications, according to this article and study that was done by the Mortgage Bankers Association, they said that refinance rate has fallen, continually fall at 2%, but it's 80% lower than it was this time last year. And for the purchases, it's down 39% from this same week of last year. So we're seeing this huge demand starting to drop, which makes sense because interest rates are the highest it's been in 22 years. And so I wanted to just look at real quick, what does that mean? Because a lot of people are like, hey, we've seen these kind of interest rates before. It's not a big deal. We just got to get used to it. So what I did is I went back and I looked at, okay, what is the average 22 years back? We're looking at 2000. What was the average household income and what was the average home selling for in the US and in the Boise market? So for here in Boise, the average wage, household income wage was 37,000 and some change. Now it's 69,000 and some change. The average house in Boise was listed at 141,000. Now the median sales price is 550,000. What does that look like? Well, that means that our wages have only doubled since 2000 to now, and our home prices have quadrupled. So with that being said, we have it quadrupled the price of the home, almost quadrupled the price of the home of what it was in 2000. But even let's just look back 1 year. So 1 year ago, because the stats came out, we were about 1% higher year over year for the median sales price here in the Valley, which is 540,000. If we looked at the interest rates of last year, which let's call it 3.25% interest rate, you could buy that house for $1,567, not including taxes and insurance. This is just principal and interest. But in today's interest rate, which we're looking average is about 7.2%, that monthly mortgage payment of the principal and interest is $2,456. That is a 57% increase, which is huge. Last year in 2021, people weren't worried about this high inflation. People were spending money freely. People were buying things more freely. Now with inflation and everybody talking about the Great Reset, the Great Reset's happening. We're seeing a recession's coming right around the corner. In 2023, we're gonna see an even heavier reset. We're even having JP Mortgage. They're coming out and saying, there's no way this is gonna be a soft landing. Everybody's starting to be more scared and awakened to what's happening in our market. So with that being said, the increase of mortgage by 57%, I believe that the demand for home buying is going down, 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 and the home prices are gonna continue to follow that trend. With the Fed likelihood of raising it all the way up to 8%, that's gonna make home affordability go even further down. I believe that by 2023, I said it in previous videos, we're gonna have a 30% correction, but if we hit 8%, going even higher, because we're gonna have, the Fed has 2 more meetings before the end of the year, and if they continue to raise the interest rates, I think we were gonna have even more than a 30% correction in our housing market, and maybe even in the housing market nationally. Because again, inflation cannot be controlled right now, according to all the stats that we're seeing. And the likelihood of the Fed raising the rates is continuing to increase. So with all this going on, a couple things that I think is gonna happen. One, I think we're gonna have a huge exodus of mortgage brokers and real estate agents. I think that's inevitable with purchases being down 40%, purchase applications being down 40%, and refinance being down 86%. I think that's just inevitable. That's gonna happen. 2, I think home prices are gonna continue to go down. So again, I've said this before and I'll say it again, if you're sitting on cash, unless it's a perfect house, it might be a good time to wait. But on top of that, there's gonna be good opportunities. For instance, we just helped one of our investors analyze a property. They bought it, they're rehabbing it, and they're gonna sell it. And so there is still opportunities out there for maybe a short flip or a time to pick something up that you're gonna hold on to for a while. What's up guys, I'm just out here. I want to share this recent project. We helped an investor analyze this property before he bought it from an auction. And then we have, then we're helping him get it remodeled. I do think by the end of this day, or by the time you see this video, we will have it under contract with another buyer. But just want to show you the project, most recent project that we helped one of our investors get. The other good thing is, as prices are coming down, sellers are going to be more scared. You're probably going to get a better deal as far as concessions go, as far as the price that you pay. But also, you don't want to wait too long. If the home prices drop 10% and the interest rate jumps 1%, you're actually just breaking even as far as your monthly mortgage payment. But let's say mortgage rates increase even higher than that 75 basis points or the 1%, you could be looking at spending even more for a monthly payment. May not be wise to wait as far as interest rates go, but it may be better to take advantage of the seller concessions and buying down the interest rate lower right now, because that same money that you would buy down from a 7 to maybe a 5 or 4.5, if you get an 8% interest rate and you can only buy down to 6, 5.5, your monthly payment is going to be different. Again, you're just going to have to sit down, look at your monthly budget, and if that perfect house comes up, it might be worth it to throw in an offer with asking for seller concessions, or maybe that beautiful lowball offer and they accept it. Thanks for tuning in. Again, please let me know your thoughts. Let me know what you think. What's going on in your market? Right now I'm looking at Boise market. We briefly touched on the whole nationwide market. We're looking a little bit more micro right now. So let me know what's going on in your market. What do you see? Do you think this market is just gonna take off again? Do you think we're gonna continue on a downward climb and gonna see a great reset in 2023, maybe into 2024? What are your thoughts? Wanna know them. Thanks for tuning in. Please give us a thumbs up. Don't forget to hit that subscribe.